at first glance, it seemed pretty okay. On the
D Street closes near flat with Nifty holding above 26,100. Broader markets outperformed as market breadth favored advances. Nearly 40 stocks ending higher. However, a sharp fall in ITC capped Nifty gains.
Smoking set to get costlier from next month when the compensation cess period ends. The Indian government notifies the imposition of an additional excise duty on cigarettes over and above the existing 40% GST rate. Cigarette prices are likely to see a 20 to 30% hike. Brokerages say that the move revives concerns about tobacco giants losing share to the illicit industry.
A strong finish to the year for automobile companies. Maruti Suzuki, M&M's December sales top estimates on the back of SUVs registering healthy growth. M&M marks its highest ever volumes in SUVs and LCVs for the calendar year. Ashok Leyland and Eicher Motors beat expectations as well. And welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear up for the next trading day. I'm Ritu Singh, and with me is my colleague Hormaz Fatakia. Hi, Hormaz. A quiet end, to the first day of trading, I guess. At least there's nothing to complain about. We're still trading on thin volumes. The broader markets ending with gains of about 16 points. Sensex down about 30 points. And in terms of the market breadth, like we said, largely in favor of advances. But if you look at, some of the key draggers for the Nifty today, ITC, that is the big stock. We will be covering that in more detail. Bajaj Finance, ICICI Bank and Dr. Reddy's on the downside. On the flip side, L&T, Infosys, M&M, Eternal, Reliance, these are some of the names that contributed to the upward move. Hormaz?
Well, Ritu, the quiet start to the index can be said so on the index level, of course, but the stock specific activity was anything but quiet, and it could have been a lot better had it not been for that drop in ITC that solely contributed 100 points to the index downside, and that is what ensured that the Nifty ended where it did, just around about that 26,150 mark. So that 26,200 range level continues to remain a bit of a barrier for the index. Of course, as you said, we continue to trade on thin volumes, so it will be interesting to see when the activity picks up starting next week when volumes return in full force. Of course, there are a lot of business updates that have come in as well, but here's what we have in store for you today. The top movers and shakers, as always, with Vivek. We decode the reasons behind the decline in tobacco stocks. Of course, as Ritu was mentioning, ITC, Godfrey Phillips. We also get you a snapshot of the auto sales numbers for the month of December so far, and as I mentioned, the key business updates that have been reported beyond the auto sales numbers. And lastly, of course, we do delve into the key market events to watch out for at the last trading day of the week. So our first segment of the day, Vivek is here with the top movers. Vivek, over to you.
Well, thank you so much for that. A thinly traded session, and even in that particular session, you saw significant price movements, especially amongst newsmakers. Well, the first set of stocks that's on our radar is the auto pack. Remember, auto sales number for December actually have surprised positively, and on the back of that, you did see sharp up moves across most of the names. Ashok Leyland over 3% higher, Bajaj Auto over 2% higher. Most of the two-wheelers did well. M&M giving a very strong outlook, and Hero MotoCorp too ended the day higher by over 1%. The two stocks that we've been discussing in depth over the last two trading sessions has been Vodafone Idea as well as Indus Towers. After the sharp fall in both the names yesterday, a sharp recovery today. Idea higher by over 7%. Indus Towers up by over 4%. JSW Energy, the other stock on our radar, slight pickup as far as December power demand is concerned. That particular stock higher by 4% today. Steel Strip Wheels, a whole host of companies in the broad end of markets have given their quarterly update. Strong set coming in from Steel Strip up by over 8%, and Zydus Wellness continue to higher for the second straight session. But a whole host of laggards as well. You can't look beyond ITC, Godfrey Phillips, the cigarette companies are grappling with the tax increase and also the need to go ahead and necessitate a price hike, something that is expected to cause volume contraction. ITC ended lower by close to 10% today. Select pharma stocks, most of them saw profit booking. Names like Abbott India, Natco, Ipca, Biocon, all of them ended the day lower, anywhere between 1.5% to 2%. Alcohol stocks today saw a bit of profit booking, so not a good day as far as consumer discretionary names are concerned. United Spirits down by almost 3%, Radico Khaitan down by over 1%.
All right, Vivek, thanks very much for that. But let's shift focus to two of those tobacco stocks that Vivek had just highlighted, because the government has notified a sharp increase in excise duty on cigarettes as the compensation cess period nears its end. Now, according to a Jefferies analyst, the effective tax hike could exceed 30%. Cigarette stocks reacted very sharply on the back of this, ITC falling by 9%, Godfrey Phillips sliding 16% in trade. Mangalam Balu joins us now to break down the new taxation on tobacco products.
Well, it's not the best start of the new year for all those who invested in ITC, Godfrey Phillips or the likes. And there are three reasons why. One, let's tell you why the stock's falling. Secondly, what the new tax regime means versus the earlier one. And the third part, what the initial calculations for all these companies' financial performance suggests as well. So let's tell you with what happened. Overnight, the Ministry of Finance has gone ahead and notified that the GST of 40% on tobacco, cigarettes, not BDs, effective from Feb 1, 2026 will take place. This was pretty much expected because, the GST 2.0 meant that this 28% plus cess, plus additional excise duty, plus NCCD, etc. will be subsumed under this 40%. However, what was not expected and came as a rude shock is that there was this excise duty that was imposed over and above this 40% as well. So what does all of this mean in terms of incremental taxation? Taxation earlier was 28% GST. Then there was a specific cess of 2,076 rupees to 4,170 rupees per 1,000 sticks. And add to that was an ad valorem cess of 5 to 36% depending on the length of the cigarette, and an NCCD or National Calamity Contingent Duty of 510 to 850 rupees per 1,000 sticks. What has now happened? That 28% has become 40%, and there has been a new excise duty of between 2,100 to 8,500 rupees per 1,000 sticks, along with the NCCD of 510 to 850 rupees per 1,000 sticks. We still need clarity on the exact imposition of this duty, the exact component or computation of this duty, and the total tax incidence. But the street's currently pricing in and fearing the worst. What is it that our total calculations or initial calculations suggest on the total impact? Total tax incidence, if these happen, then could be higher by between 20 to 40% per stick, which basically means that as of now, of the MRP that you pay on your cigarettes, taxes accounted for between 50 to 60%. That itself will go all the way up to 65 to 80%. The companies may have to take price hikes to the effect of 18 to 35% per stick to mitigate this tax impact. So what this means is your cigarettes could get more expensive by 20 to 35%. And if that were to happen, then that would have a negative impact on volumes of these companies. If they do not change the prices and take the tax increase on their books, then that would be an EBIT impact of over 40%. The street's fearing that, which is why ITC is down over 9%, and we have Godfrey Phillips down by about 15% as well. But what we need clarification on is exact imposition of these taxes, impact on volumes if price hikes are taken, impact on margins if price hikes are not taken, and finally the impact of higher taxation on the government's own revenue, because as taxes increase, it's not necessary that revenues increase, because the illegal contraband industry increases its market share as well. We're seeing a bigger cut on Godfrey than ITC, also because one, Godfrey has been an outperformer. Secondly, the impact of illegal would hurt Marlboro more than it would hurt ITC's brands. So let's see how this pans out. The street is fearing the worst. We need some clarity, but as of now, increase of taxation by 20 to 40% is on tobacco means that's not a good start for all those who've invested in these stocks, and perhaps a reason for those who are thinking of quitting smoking on the new year, maybe a reason for that.
Maybe a New Year resolution, but the street indeed is fearing the worst, as evident from the stock price reaction in both of these names. Mangalam, thank you for summarizing the entire event for us. That has been the big talking point of the day. And let's take this forward with Amrish Baliga, independent market expert, and Ruchit Jain, the technical research head at Motilal Oswal. Gentlemen, good afternoon. Thank you for joining in. Wish you a very happy New Year. But it's not been a very happy New Year for both ITC and Godfrey Phillips, Amrish. But at these levels, do you believe ITC makes it an attractive buy, A, because of the valuation comfort, B, because of the dividend, and of course, business is much beyond cigarettes?
Thanks, Thomas, and wishing you a very happy New Year. If you go back in history, the last 15, 20 years, whenever we have seen increase in taxes as far as cigarettes are concerned, we have seen a knee-jerk reaction for ITC. And always is a fear that ITC may have to absorb a part of it, and because of which the margins will get affected. But whenever such incident has happened, and those who have bought ITC at lower levels have never lost out. So I think after a long time, we are getting this opportunity. I'm not saying that this will be the low for ITC. It's very much possible that we could see a further downside, maybe another 5-8% more. But I think if one is looking at from a longer term perspective, that could be a good level to start buying. Because, we know this this would be coming since a long time. And clearly, I think ITC is also moving away from cigarettes into FMCG, into paper, into agro. And this has been happening for the last 10, 15 years. So it's a very clearly decided shift. So longer term, I don't think this will have much of an effect. But in short term, yes, we are seeing that effect now.
The short term indeed. And Ruchit, to you now, for almost the entire year of 2025, ITC managed to hold on to levels of 400 on the downside. There were brief slips, but of course, on a closing basis, it did. But today, that gash has distorted charts. What are the levels that you're watching out for now?
Yeah, very good afternoon, Hormaz. Very good afternoon, everyone. Well, the stock was already in a consolidation phase and had not given returns in this entire calendar year 2025. Post that demerger which we saw last year in the month of January, I think it was an entire year of consolidation only. Now, yes, importantly, the 400 level was quite a good support for the stock. Now, as that breached today, post that news, I think we witnessed some sort of unwinding because of that support was breached and the negative news itself. And that's why we have seen this underperformance today. So technically, the short-term trend remains negative. Important support would be around 345, 350 zone. One needs to see whether it managed to hold that level and witness any bounce back. Because of the overflow setups on the daily chart, I think 345, 350 would be the range from where some pullback move for no could be seen in ITC.
All right, gentlemen, hold your thoughts. We'll come back to you on another sector we're tracking, and that's the automobile companies. They finished 2025 strong, registered strong sales growth in December. Maruti Suzuki M&M vehicle sales surpassed the street's expectations as sales of SUVs and entry-level variants accelerated. Sudarshan Kumar is joining us with more on the data that has come in. Sudarshan, how did the auto majors perform in December?
Auto companies say goodbye to 2025 on a very high note, with all the companies that have reported sales so far have seen a growth in double digits. So we'll start with the company which was the first to report the numbers, Mahindra Group. Both these segments, PV as well as the tractor segments, have seen a healthy growth. So talking about the PV segment, it continues to see a very healthy growth in the month of December. Total growth was 25%, in line with our expectations, and that growth continues to be led by SUV segment, which has seen a growth of 23%. In the commercial vehicle segment, in the month of December, both CV having the capacity of one less than 2 tons and one that has the capacity in the range of 2 to 3.5 tons have seen good growth. But if you take a look at the data up to December, the CV having capacity up to 2 tons has seen a decline, but company is saying it's not of a concern because now demand has shifted towards higher capacity CV. Now coming to Maruti, it continues to see a very strong growth. In the month of December, total growth was 22%, much higher than our expectations, and this time the surprise part was the entry-level segment. In the month of December 2025, total sales for, if you combine Alto and Espresso, have doubled if you compare against December of 2024, thanks to GST rate cut. SUV for Maruti Suzuki continues to see a healthy growth. In the month of December, total growth was almost 36% YOY. Now, next company was Tata Motors Passenger Vehicle. Again, it too has seen a double-digit growth. Growth was 14%, but slightly below our expectations. But the positive part here is company is saying retail sales in the month of December were much higher than wholesale, and because of that, number of inventory days has come down sharply to 18 days. And going forward, Q4 FY26 and FY27, company is expecting it's going to be very strong. Amongst two-wheelers, so far, Eicher Motors has reported numbers for Royal Enfield, and total sales have increased by 30%, much higher than our expectations. But for Eicher Motors, one slight minor concern is the low demand that company is saying for bike having the capacity more than 350cc. Sales for that segment have seen a decline in the month of December. But bike having the capacity up to 350cc continues to see a healthy growth, and that forms majority part of total bikes, more than 90% of total sales that company does in 1 month. So overall, so far, whichever companies have reported numbers have seen a healthy growth and much higher than our expectations.
Sudarshan, thanks very much for bringing us that data. Ambrish, you know, in the first half of 2025, we saw a lot of pressure on the auto stocks on the back of tariff and whatnot. But in the second half, especially after the GST cuts, we've seen a bit of an outperformance. In fact, the Nifty auto did better than, the frontline index. Do you expect that momentum to continue into 2026? How are you looking at some of these auto stock names?
Well, I think this momentum will continue, but could be slightly lower than what we saw in the last 1 quarter, because now we'll see price hikes coming from all the auto majors. So that could slow it down a bit, but it will not slow down so much. So I'm still positive on, most of the auto stocks, because like I said, I see this momentum continuing. And especially I would be bullish on something like a M&M, because we have seen that after they launched their XEVs, which is the EV SUV in April, we've seen a huge increase in the numbers. And with the new launches which have been happening, I think that will continue to drive M&M higher. And as far as the HCV space is concerned, I would still be bullish on something like a Ashok Leyland.
And trading at record highs now. is the stock. But the other one that was in focus today was Kiri Industries, and it sold its stake in Dystar with net proceeds from the transaction expected to be around 5,200 crore. This after accounting for capital gains tax and other legal expenses. However, the stock was down 6% because the management revealed plans to deploy over 90% of the proceeds into futuristic businesses, leaving little room for a one-time reward to shareholders. Listen into what the management had to say.
That would be more than 5,200 crore that will come to the company, inclusive of taxes, expenses, everything that relates to that. See, the majority, I would say, based on the earlier discussion, more than 90% would be deployed into futuristic growth projects in India. How much would be the precise number for the dividend? That would depend on the board to decide, but large chunk of money would be invested for the future growth.
All right, Ruchit, before we let you go, quickly for our viewers, since we're starting 2026, top sectors, you think have the potential to outperform this year, and any specific stocks that are going to be on your radar?
So recently, off late, we have seen a lot of buying interest coming in some mid-sized private bank. You see banks such as Federal Bank, CSB Bank, City Union Bank, IDFC First Bank. We have seen a lot of volumes happening in these stocks, compared to what we have seen throughout the year. So I think in this year, mid-sized private bank would be one segment. Already a good outperformance has been seen from the PSU banks. I think from the private space, these would be the stocks where we should see a good outperformance. CSB Bank is one of the mid-cap bank which we like technically. Even City Union Bank, if you get any dip, then buy and dip approach could be kept. So this is one segment where one can keep focus on.
Okay, we'll leave it at that. Ambrish and Ruchit, both of you, thank you very much for joining us today, and wish you both again a very happy new year as we start 2026. On that note, we'll slip into a short break, but up next we'll get you some third quarter business updates that we've got through the day and some key market events to watch out for the trading day tomorrow.
Welcome back. On to some business updates. Then Coal India shares edged moderately higher after its business updates. Production was up around 4.5% for the month of December. But for the first 9 months of the year, it is still lower compared to last year. And the overall figure too is only around 60% of its annual guidance of 875 million tons.
Well, Karur Vysya Bank is traded near record highs today after the lender reported strong business growth in the third quarter. Its deposits rose by about 15.6% year-on-year to more than 99,000 crore rupees, while advances increased 17% to 97,000 crore rupees. Its total business now stands at 2.12 lakh crore rupees, which is up 16% compared with the same period last year.
And APL Apollo Tubes also reported its highest ever quarterly sales volumes, highlighting strong demand momentum in the third quarter. Sales volumes were up 11% year-on-year, 7% sequentially to nearly 9.2 lakh tons. Volumes so far this fiscal are also up 11% when compared to last year. This stock too was trading at 52-week high levels.
All right, and before we wrap, let's get you some key market events to take note of for the trading day tomorrow. Gaurav Javalkar is standing by to give you the key events to focus on. Gaurav?
Well, yes, there are some markets who are still following the holiday for New Year in the likes of New Zealand, Japan, China and Russia. But the rest of the markets will be open. So let's first talk about US market. From there, first cue is that the Tesla earnings. Now, they will come and it is crucial to see how the sales number are going to be for Tesla. Second is that US weekly oil and gas rig count. That is also something that we will be tracking. And third is that the manufacturing PMI data. So let's see how the number comes for US market. Apart from that, Chinese AI maker, chip maker, Shanghai Biren Technology. Now, this company is also going to make its debut on Hong Kong exchanges. And given that we have already seen some rally in the AI stocks like Nvidia, let's see how the valuation and how market treats this company specifically in the Hong Kong market. Apart from that, from the Indian market, first let's talk about the PM Modi's event. He is going to hold quarterly sectoral review with Minister of Coal, and this will go for January 2nd and 3rd. So let's see if any significant thing comes out of this meeting. Other than that, Delhi government is going to have a meet with 5 automakers, SIAM and EV Policy 2.0. So let's see if anything comes out from this as well. So definitely we'll be watching out on all the automakers tomorrow. From macro indicators, we'll be getting manufacturing PMI data for the month of December, bank loan growth and deposit data for the month of December, and lastly, the forex reserves data. Now, that is also something that we will be closely tracking on because we have already seen some insane moves in the currency in the past few days. Lastly, from the results point of view, we will be tracking Corona Remedies and Sri Krishna Prasadam Limited for the results for third quarter of FY26. And let's also not forget about MCX. This company is going to have its first ever stock split in the ratio of 1:5. So definitely, let's watch out on all these stocks and see how they perform in a day tomorrow.
Indeed, we'll keep an eye out on all of that. And as Gaurav was mentioning that a lot of markets still remain shut tomorrow, it's okay. We'll compensate for that. We're still open on the final trading day of the week. We take your leave on this edition of Markets Forward. From Ritu and me, thank you so much for watching. News and updates continue on the other side.